Alright, so what if I tell you that there's $100 trillion market that controls global finance and most people have absolutely no idea about it? In fact, your country's stock market, your supply chain, and that global oil trade, all of it runs on something that we call Eurodollar system, which is a hidden financial infrastructure which is so powerful that whenever it breaks, the entire world economy freezes. And here's what's wild, the Federal Reserve doesn't fully control it. So, if you actually want to understand why financial crises happen and why dollar is the king and how global trade actually works, you need to understand this system. So, a quick question. Where do dollars live? For most people, answer would be United States. But here's where it gets interesting. A bank in London is creating a dollar loan. A bank in Singapore as well is creating a dollar loan. Even a bank in Dubai is creating a dollar loan. And the most interesting thing is they aren't even American banks. The money never even stepped foot in America. There is no Federal Reserve vault where these dollars are sitting, and yet somehow dollars are created. How is that even possible? And that's exactly the question that leads us to the real answer. The answer is euro dollar system. Now, before you worry, it's not about euro. That's one of the most confusing things about this topic, and it trips everyone up. The name is historical and it's kind of terrible, but bear with me. See, the Eurodollar system is arguably the most important financial system that most people have never heard of. It's not taught in school, it's not covered in mainstream financial news, and it absolutely should be. Why? Because understanding the system is the key to understanding why the global economy works the way it does and what happens when it breaks. So let's rewind to 1960s for a second. After World War II, the world was booming. Global trade was exploding. Companies across every continent increasingly needed something and that was dollars. But why? Because most of the world's oil commodities were priced in dollars. Ships crossing oceans, invoices written, international contracts and deals. Everything was settled in dollars. The US dollar had become the global reserve currency. Central banks held it, companies needed it, and the emerging markets depended on it. But here's the problem nobody talks about. If you are a company in Japan, India, or Germany, and you need dollars for business, how do you get them? You could go to an American bank, but that comes with the red tape, regulatory hoops, time zones, capital controls. It's absolutely ridiculously slow. It's inefficient. And as global trade exploded, this became a real bottleneck. The world needed dollars faster than the traditional banking supply system. Right. So imagine you're a company outside America. Maybe you are in Japan, maybe Singapore. So you need dollars loan for expansion, trade, working capital, whatever. Right? What are your options? You go to a US bank, but they are far away. They have their own regulatory requirements. They are in a different time zone. There might be capital controls on your particular country. The approval process could actually take forever. It's not malicious, it's just friction. See, friction slows down business. Friction makes things expensive. Friction means lost opportunities. So here's what happened. Global demand for dollars was growing way faster than the traditional banking system could even think of completing it. There was a gap. And when there's a gap in business, entrepreneurs find a way to fill it. And that way change global finance forever. Right? Now, most finance textbook will tell you that euro dollars were just dollars held outside America. That's technically true, but it doesn't explain anything. It's like saying credit cards are pieces of plastic. Technically, it's accurate, but it misses the whole point. Let me show you how it actually works. Right. So the company deposits $1 million into a London bank, which is real money and a real deposit. Then we have step 2. What happens in that? The London bank doesn't really sit on it. They lend most of that dollar amount deposit, let's say 900,000, to another borrower who actually needs dollars. And here's where the magic happens. The dollar loan was just created and it was outside US, without Federal Reserve printing anything, without any American government involvement, right? And that's the birth of euro dollar market. That single transaction, which is repeated million of times globally, is what creates this hidden system, right? Now I want to explain something that I've already talked about, but we're gonna learn it with a much more deeper layer. Alright. So when that London bank took your deposit of $1 million, they lent out 900,000. Right? They created new money, and not in a printing press sense, but in a credit sense. That $900,000 basically became a deposit for whoever borrowed it. Right? They spent some, and the other banks they deal with accept deposit of that $900,000, and that bank then again lent out $810,000 of that particular deposit, which became another deposit, right? Which actually gets loaned out again. So what is happening here? That $1 million becomes $900,000, becomes $810,000, become $7,029,000, and so on, right? But the key is the entire chain reaction, the whole money multiplier effect. It's happening outside the US banking system, in London, in Singapore, in Dubai, everywhere except America. The Federal Reserve isn't controlling any of this directly, and that's the whole point, right? So let's do some maths. $1 million, which was the initial deposit, and that's the real money. But through this money multiplier effect, through repeated rounds of lending and deposit, that 1 million can create approximately $10 million in total dollar credit. 10 times multiplied by 10, now scale that up. You're not talking about 1 million anymore. You're talking about trillions of dollars in deposit globally. That means that the euro dollar system isn't just storing dollars, it's actively creating dollar credits at a scale that rivals the entire US economy's money supply. There is no side market. This is basically an infrastructure that runs global finance, and barely anyone knows about it. Right? So, you might be asking, why would companies choose foreign banks instead of American ones? Right? Good question. So, the first part would be you get more dollar access. See, foreign banks could provide dollar financing directly without going through the US regulatory gates. They actually can, whenever you want a quick dollar loan, you don't need to navigate Fed compliance. Right? It's complicated. It's again friction. You just negotiate with the bank and you get the loan. Right? Then reason number 2 is global availability. Right? These markets are basically open 24/7 across time zones. See, London is opening up when New York closes. Asia wakes up when London closes. Dubai, Singapore, dollars are basically on demand any hour. Then we have flexible financing. And this basically happens with a less red tape. See, tailored terms of international borrowers, not standard products which are designed for American regulations, right? Then we have the trade efficiency. It matches the actual currency of the global contract. See, when your oil shipment is priced in dollars, you want dollar financing, not having to convert currencies. You pay exchange fees and you don't want to deal with multiple currencies, which is basically affecting your efficiency, right? So add all these up and you get an entire financial ecosystem that answered a real economic need, giving global companies access to dollar credit faster, cheaper, and more flexible than the traditional systems, right? And this is the reason why it exploded in size. So now let's make it real with the very actual or real kind of example, right? Let's say it's 2024 and you are a Japanese company. You import oil, machinery, electronics, whatever. So to keep your operations running, you need maybe $500 million to pay suppliers across the world, right? The step one would be you need dollars, obviously, because global commodities and suppliers, obviously, they want to be paid in dollars, right? So you don't directly fly to New York and walk into Federal Reserve building. No, that would be ridiculous. Instead, you call a bank in London, a bank that specializes in international dollar lending, right? The bank says, sure, we'll give you that $500 million in credit. Done. No visa needed. You never really traveled to America. No regulatory approvals needed. It could actually lead to 6 months. So you're not, in the loop, right? And you actually get the financing that you needed. The trade happens, oil moves, machinery ships, your economy is something that is growing, and all of it is happening on dollar credit, which was created by a bank that never was in touch with the US dollar, right? So now multiply this particular example with millions of company multiple times a year. You see why this system exists. It is actually solving a very real problem. It is enabling global trade at a scale that would otherwise be not accessible, and that's powerful. And to be honest, it's dangerous as well, right? But for now, let's zoom out and think about it at different levels, right? At the micro level, we are talking about one company. We have one importer or exporter who needs dollar financing for a specific trade deal. That's bottom up, real world, and concrete. At the meso level, we are talking about the entire industries, the shipping companies, energy companies, manufacturing sectors, all relying on the dollar credit from foreign banks to operate and expand. Hundreds of thousands of companies, trillions in funding needs. At the macro level, this is where it gets sobering. The entire global economies depend on smooth dollar liquidity flowing through this hidden system. When dollars flow freely through Eurodollar channels, trade happens, growth happens, and everything works. But when that flow stops, well, we'll get to that. That's the progression for individual transaction to systematic importance, and it's this reason why this system matters so much, right? Now, everything that I've explained so far, it's a simplified story. Deposits flow in, loans flow out, trade happens, clean and simple. But in reality, it's actually a pretty much messier. In reality, the Eurodollar system is interconnected web of banks, hedge funds, corporations, governments, central banks, shadow banking, money market funds, financial intermediaries you never heard of. All of them are connected, all of them are trading, all of them are moving dollars liquidity across borders. And with that complexity comes risk, liquidity risk. Can you get the dollars when you need them? Funding risk. Can you borrow the dollars to lend? Then we have the counterparty risk. What if the bank you are dealing with defaults? Currency risk. Exchange rates can swing. Refinancing risk. What happens when short term borrowing matures? See, every risk I just listed, every single one of them can cascade through the system and cause real problems. And that's what we need to talk about next, right? So here's a critical question. What happens when everyone suddenly wants dollars? Imagine this scenario. Global companies have taken out dollar loans. They have borrowed from banks in London, Singapore, Dubai, and a total debt of $1 trillion exists. But the available dollar funding in the system is only 700 billion. You have $1 trillion owned, you have 700 billion available, and that's a gap. That's a $300 billion gap. That gap is called dollar shortage. And when the dollar shortage happens, things break. Companies can't pay their suppliers, bank can't roll over their borrowings, the machinery of global trade seizes up. People start panicking, obviously. This isn't theoretical, this happens. And when it happens, it's devastating. Right? Here's what most people miss. Many, maybe most financial crises are actually dollar funding crisis. See, people look at financial crisis and they analyze the local economy. Oh, emerging markets are struggling. Oh, tech stocks are falling. Oh, maybe the real estate prices just drop. Right? But what they're not seeing is the dollar plumbing underneath. When global players can't roll over or access the dollar credit, the system actually seizes. It doesn't matter if the local economy looks healthy. It doesn't matter if companies are profitable. If you can't access dollars, the currency in which you borrowed can't function. The crisis isn't always about fundamentals, it's about dollar availability. It's about liquidity. It's about whether the Eurodollar system is functioning or not. Understanding this particular things can actually change the way you think about the financial stability, right? So let's talk about a very recent example, not 2000 financial crisis again. That's actually recent, ancient history now, right? So let's talk about March 2020. The COVID hits. The world actually shuts down. What happened? See, investors panicked. They dumped their assets. They fled to cash. But to settle those sales, they needed dollars and a lot of them. Companies start panicking as well. They drew down their credit lines. They needed cash reserves, dollar cash reserves specifically. They started hoarding. See, banks saw the chaos and they tightened the dollar lending. We don't know what's coming. We are keeping our dollars and they are hoarded too. What happened next was that the demand for dollars exploded globally. The world needed dollars and that too desperately. The Fed had to jump in with emergency dollar swap lines to other central banks. They had to essentially print dollars and send them globally to prevent a total collapse. And that's how fragile the system is. One global shock, 3 weeks of panic. The most powerful government in the world had to declare an emergency. And most people don't even realize it was happening. Right? So, let me bust a myth that most people believe. The myth: the Federal Reserve controls the dollar. The Fed controls global finance. The Fed pulls all the strings. The reality, it's way more complicated than that. Yes, the Federal Reserve controls the US monetary policy. They set the interest rate. They manage the the money supply chain inside America. They regulate American banks. But there are also US banking system itself, traditional deposit and lending within America, that's separate. That's not directly controlled by Fed policy. Then there is the euro dollar system as well. Foreign banks are creating dollar credit globally. Operating outside the US jurisdiction, they're creating money that Fed doesn't directly control. Right? And then there is global banking. All across border flows, the shadow banking, the interconnected web of financial institutions worldwide. The Fed influences all of this, but controlling, no. The Fed doesn't fully control global dollar creation, not even close. That's why understanding the euro dollar system is so important. It shows you that the dollar's power extends far beyond any single government can control. And here's something important I want to be honest about. Even economists, the people who study this for their entire careers, don't fully agree on how large and influential the euro dollar system is. Some say it's enormous, the foundation of global finance. Others say it's overstated. That modern monetary policy is much more important. They argue about the numbers, about the mechanism, about whether it's growing or shrinking. The fact that economists disagree this much tells you something important. The topic is complex. It's important and it deserves serious study. You shouldn't take anyone's words against as gospel here, including mine, but you should absolutely understand the system well enough to form your own opinion, which is exactly what we are trying to do here. So let's apply our understanding and think about what could go wrong. And I want to be clear, these aren't hypothetical. These have all happened before and they could all happen again. Fund freezing. Banks stop lending dollars to each other overnight. It happens when panic sets in, when trust basically evaporates. Suddenly, the whole system that depends on bank lending to each other freezes. Dollar shortages. We talked about this. Global players can access or roll over dollar credits, and there's a gap between supply and demand. So people get desperate and prices eventually spike. Then we have the counterparty failure, right? So one major bank default fails, everyone suddenly who's basically dealing with that bank is exposed, and because everything is so much interconnected, the failure spreads throughout, right? Then we have the global liquidity short. Even a sudden severe loss of liquidity hits the system, trade ceases. Emerging markets get hit the hardest because they depend most on the dollar flows. Then we have the refinancing crisis. Trillions of dollars in short term dollar debt comes due, but the system can't actually renew it, right? So companies can't basically refinance and defaults cascades. Then we have the central bank stress. Even Fed swap lines and emergency interventions can't contain the panic it creates. The backstop basically falls, and that's the worst case, right? One of these bad, but multiple all at once, that's catastrophic, right? So now here's something that is very important to understand about the euro dollar system. See, it's not good or bad, it's both like a double edged sword, right? During the good times, when confidence is high, when the trade is going, when the euro dollars create liquidity, they actually enable commerce, they fund the global growth. Without the system, the global economy would be much smaller. Emerging markets wouldn't grow like they do. International trade wouldn't flow like this. But during bad times, when panic sets in, the same mechanism can actually amplify stress incredibly fast. Liquidity evaporates, dollar credit contracts. The system that expanded so quickly can contract just as fast, right? And trust me, with devastating speed. The same mechanism that expanded the global dollar credit in good times can suddenly contract it in bad times. And that's why it's so dangerous. And that's why it's so important for us to understand this. Right? So remember where we started. We asked how can dollars exist outside America? And now you know the answer. The global demand for dollars, the global demand for dollars make every, because basically every country needs them for trade, right? Then we have the foreign banks who basically see an opportunity and start accepting the dollar deposit. Then those banks create dollar loans, which create new dollar credit outside America. The dollar credit expands through the money multiplier effect. $1 becomes $10 of credit. Then the credit finances through global trade and borrowing, which accelerates growth. And that's the full picture. And that's how basically dollars exist outside America without the Federal Reserve actually printing them. And that's euro dollar system for you, right? But here's something most people get wrong about this system. The euro dollar system isn't really about euro. The name is historical, it's misleading, and don't get stuck on the name. And it's, to be honest, is not about physical dollars either. You won't find walls in London filled with dollar bills, right? That's not what this is. The euro dollar system is basically a global dollar credit machine, right? It is a system that is built outside United States, but it is deeply connected to the US dollar. It's not about geography, it's only and only about credit, right? It's about increasing the ability to create, borrow and lend dollar dominated credits, and that too globally, right? So once you see it this way, everything actually clicks, right? You're not thinking about euros or euro, you're thinking about a global financial plumbing, right? So what does this system actually do in the real world? So it actually helps in financing global trade, right? Oil tankers across oceans, container ships moving goods, commodities dealing worth billions, all of it actually runs on dollar credit, which was created offshore in the euro dollar system, right? It also supports corporate borrowing for many multinationals. Companies like maybe Nestle, Toyota, Samsung, they don't just borrow from banks in their home countries. They tap dollar loans from bank in London, Singapore, Dubai, India, anything. And they don't even touch the US soil, right? Then it actually helps in moving capital across borders, right? We talk about hedge funds, asset managers, banks. See, trillions in dollars liquidity are shifting daily through this system to wherever it is needed, right? And okay, yeah, it is a big one. It is actually influencing everything. See, when this system is healthy, emerging markets growth accelerates, right? Commodity prices rise because there's dollar credit to finance extraction and shipping. Banking stress actually is having a test. Central bank policies work as intended. So when this particular system breaks, everything feels it, right? Okay, so here's the final thing I want you to understand. This might actually change you how you think about money. Most people think the global economy runs on dollars. The deeper truth is the global economy runs on dollar credit. Those aren't actually the same thing. See, dollar is a currency, it's a physical thing, and basically a claim on value. Dollar credit is the ability to borrow dollars, to basically use dollars as a collateral to with a promise to repay dollars in future. So it's more of a financial relationship, and much of that credit, maybe most of it, is created outside US itself. So by banks that never actually touch the American deposits in jurisdictions the Fed doesn't directly oversee them. Right? The dollar's power isn't just about the US military or US government strength. It's about the entire global credit system that's built on the dollar. That system is the euro dollar system. And that's the real power. And that's why understanding it matters so much. Right? So, the hidden dollar system is one of the most important and least understood mechanism in modern finance. Most people spend their whole lives not knowing about it. They don't even understand why financial crises happen in the first place. They don't understand why dollar stays so powerful. Now we have talked about it in two videos. One was petrodollar and now we have the euro dollar as well. Right? And because of that, they don't even understand the hidden systems that are undergoing and happening, and everything is created because of that, right? But you you just watch this entire deep dive and you understand this now. So here's what I'm asking: if you want to keep going deeper on these hidden financial systems, on banking, capital markets, how money actually flows underneath the global economy, I would love if you subscribe my channel, right? Because I love covering these topics in depth, right? And like this video, if it actually helped you change how you think about dollar and global finance, comment below with what actually surprised you the most. Was it the dollar that existed outside America, or that the Fed actually never really controls the system, or maybe something else, right? and share this with someone who actually needs to understand how real world works. Thanks for going and coming with me on this deep dive. I'll see you in the